Sarah Borgeson-Keto with NAREITsREIT.com, and I'm here in New York City for REITWeek 2016, NAREIT's Investor Forum. I'm joined today by David Nunes, President and CEO of Rayonier. Welcome, David.
Good to be here.
So Rayonier recently announced it was upgrading its Pacific Northwest portfolio. What did that involve, and what's the largest significance for the company?
In our Pacific Northwest portfolio, we have had an imbalance of age classes, which really translates to a lower harvest level. So we have been on the lookout for a high-quality property that had an older set of age classes, and a very high-quality property came on the market, a company called Menasha, which has been dates back to the mid-1800s. We teamed up with a timber investment management organization that had an interest in a younger subset of that property. We paired up and we were successful buying it, and then we took it a step further from a portfolio management standpoint, and we sold a subset of our existing Washington acreage to that same company. So we sold 55,000 acres. We ended up with a net purchase of 61,000 acres, and what it did is it substantially increased our proportion of older timber, and what that will then translate to is a level of harvest that's higher, where we'll go from about 1 million tons of projected harvest next year to 1.3 million tons. And so for us, for the Pacific Northwest, it increases our cash flow considerably, and it does a couple of other things that we were keen on. One, it increases our proportion of Douglas fir, which is a very valuable species. This property had 83% of its inventory in Douglas fir. And then two, it accesses some very strong domestic markets. Oregon is the largest lumber producing state in the country, and it gives us access to really strong domestic markets for that. And we were able to do all of this in a way that it'll ultimately get us to a place where next year we'll be able to fully fund our dividend, and that was a key objective of us as well.
And how would you describe pricing conditions in the Pacific Northwest and southeastern U.S. markets?
Generally, the pricing for saw logs is tied to the recovery in housing. And so as we've seen a gradual recovery in housing, we've seen a gradual recovery in saw logs. In the Northwest, we do log exports, and so there we have a little bit of market differentiation or diversification into Asian markets. And in the Southwest, we have a fairly large proportion of our wood going into the pulpwood sector, and we currently in the Southwest we have about 70% of our mix going into the pulpwood sector, and that behaves in a different manner, and so we've been able to enjoy relatively stronger pricing in that subset of our market.
And earlier this year, the company increased its stake in its New Zealand joint venture. What strategic role does New Zealand play? Really,
for us, New Zealand is about getting into is a market differentiator or diversification play. We believe in being in the best softwood lumber markets globally. We certainly have those in the U.S. South and the Pacific Northwest. New Zealand gives us access to 3 markets that we wouldn't otherwise have access to: a subset of the China market, South Korea, and India. And in this particular environment, radiata pine, which is the primary species that we grow, competes very well in the China market. 30% of our radiata pine goes into the plywood market in China, which is a very strong market. And so we feel that while the U.S. housing recovery has been fairly tepid, New Zealand gives us a great diversification into other Asian markets.
Great. Thanks very much, David.
Thank you.
And for more information on REITweek 2016, be sure to visit REIT.com.